Welcome back. With International Women's Day just around the corner, a new report has revealed a persistent gender investment gap in property. While home ownership between men and women is nearly equal, far fewer women are investing in real estate. To break it down, we're joined this afternoon by Emily Rayner, property editor from view.com.au. Good afternoon, Emily. So why is this gap happening?
Well, it really comes down to affordability, financial confidence and the gender pay gap. Women tend to be more risk adverse with investing and many struggle with the rising cost of housing. But interestingly, in the baby boomer generation, women outpace men in terms of property investment, with 11% owning one investment property compared to 10% of men.
So when you're breaking down the data, this is really interesting, Emily. Younger women are feeling this the most. Why aren't they investing?
Well, we can see that Gen Z women are almost twice as unlikely as Gen Z men to own an investment property. You've got just over 6% compared to close to 14% of men. This really comes down to high prices, tighter lending rules, and also lower wages earlier in women's career, which makes it harder to get on the property ladder as an investor.
And Emily, talking about this gap, when you break it down again, it's not just property. Women are also investing less across the board, from shares to cryptocurrency.
That's right. We can see that there's a bit of a lack in financial education, and that's really key to getting women into investing. More female-focused investment groups are emerging, though, and we can see rising trends in unexpected places like TikTok, which really help boost confidence and knowledge. But always seek advice from a qualified financial expert, because it can really make a huge difference.
Now, let's talk about where the opportunities are, Emily, because this is really interesting. We saw regional property markets booming during COVID. Now, with city-to-country relocations nearly 20% higher than those pre-COVID levels, we're really seeing this new trend emerging too. What's driving that?
There is definitely a second wind of people moving to and investing in regional areas, which is really keeping prices strong. A recent report by CoreLogic and Ray White showed coastal hubs like Wollongong and Newcastle in New South Wales are still hugely popular, and they've had some massive price surges. And there's other regions that are continuing to stand out.
So talking about those regions standing out, which areas?
Townsville in Queensland, that's really leading the way, and there's been a huge price up, a massive 24.4% in February. Western Australia mining regions like the Pilbara and Goldfields are also still really booming, and South Australia has seen prices jump over 11% in the past year in their regional areas.
So Emily, considering the market is so expensive at the moment, the silver lining with this is investors could start to look at investing in those regional areas, especially for women, for a more affordable entry point.
That's right. You've got lower buying costs, you've got really strong capital growth, and it's a great opportunity for female investors looking to start or expand their property portfolios in those regional areas.
Okay, Emily Rayner from view.com.au, thank you very much for your time this afternoon.
Thanks, Tash.